Hey everybody, this is Cree, founder of Millennial Investor Community, and today I'll be sharing with you how you can pay off a $200,000 mortgage, a $30,000 car, a $12,000 line of credit, and you can do it while making $60,000 a year while keeping all your existing bills the same. Before I jump into that, I want to tell you a little bit about who I am, what's my story, and I went to college. I did the whole, go to school, get a good job kind of thing, but I came out, I didn't have a great job. I was making $1,000 a month doing door-to-door business sales. And someone would say, oh, I was lazy. Well, no, I was knocking on like 50 to 60 doors a day. So I was definitely not lazy. I was working sometimes 12-hour days and I was making, $1,000 a month. So I was really deep in debt, broke. And I also had a broke mindset. And what changed all that for me was I started to self-educate. I had paid $30,000 for school, which normally would have cost $200,000. So I was very fortunate from that regards. However, I stopped learning after college, and that mindset of not learning was what got me stuck. So 2 years after graduating, I started to invest in myself and really start to learn and seek out more information and experiment with new things. And 7 years later, now I'm running a digital marketing agency. I work with other agencies to help them with increasing their return on investment for their clients. We also run a real estate investing company, and we help homeowners, landlords, property managers with increasing their NOI and their cash flow. And we also help new and seasoned investors with increasing their cash flow too. So I'm going to talk a little bit about that, but what we teach is so much more than just how to fix and flip, how to wholesale, techniques of real estate. So what we teach includes tax strategies, credit management, infinite banking, maximizing your time and effort, especially if you're a real estate investor and you know that you're only getting paid whenever you're actually making sales or whenever you're buying and selling properties. We have ways of being able to help you with that. We help investors cash flow on fix and flips while they're actually fixing and flipping it. And we also help wholesalers wholesale the right way. So we have a lot of strategies that we can teach you. It's just so much more than just one tactic or strategy that you see being taught on YouTube or being talked about in blogs. And I really encourage you to reach out. You can hit me up on Facebook at Cree, that's C-R-I, Childs, that's C-R-I. Cree Childs, and hit me up, shoot me a message, let me know what you're doing, where you're at in your investing journey, and I'll be more than happy to share with you what we got going on. We do property tours, we show people how we're fixing and flipping properties, what we're going to be doing with properties. Sometimes folks are going through financial hardships. We can help them get out of that. And we have a lot of different strategies that we teach on how to do that. We also have online events that we're doing because of COVID. So we've got online trainings. We teach the same stuff that I'm teaching here, but you can do it live in person. We've got study groups, so you can meet other investors, other people that are doing, learning these strategies, and you can accelerate your learning and also network online with other investors. So there's just a whole lot that we do. Reach out to me on Facebook, and we can talk more about that. Rather than take the time to draw all this out and then while recording the video, I went ahead and just drew it out for you so you can kind of see what's going on. So I'm going to explain this right now. So this is the amount of money that we've got coming in, right? We've got $5,000 a month coming in, and we've got checking and savings. These are the two accounts most Americans have. So the money that comes in then goes out. This is how most Americans live. All their money that goes in, they spend all of it, and then they have zero cash flow at the end of the month. So what I'm going to do is I'm going to show you. This is your house. This is your car, right? Car, house. And let's just assume that the mortgage is $200,000 with 6% loan. I've actually talked to people that have higher than that and some people that have a lot lower than that. Some people would say, go ahead and refinance it. I'm gonna show you why you don't want to refinance your home right now and why you'd actually be better served paying it off and then utilizing it as a tool to be able to invest and increase your cash flow. So again, all things being equal, this is an example, $60,000 a year, $200,000 mortgage, 6% loan on the mortgage, 6% on the car, which is the average on a $30,000 car. So we've got a $1,200 mortgage payment, a $600 credit card payment, that's the minimum payment on the credit card, $600 for living expenses, and then $1,200 for miscellaneous. So between these two, it can be your food, gas, groceries, all of those things, dining out, fun stuff. So basically, all the money that comes in goes out, and the savings account over here is either a 401k, a bank account balance, Roth IRA. People are putting money into those saving vehicles, and we'll talk more about why that's a good thing and a bad thing later on. But for now, again, we're just assuming that money that comes in goes back out. So over here, we've got a line of credit. This is your credit card payment. So we've got $1,500 total available on the line of credit, and we have a $12,000 balance on the card. Now, we're at 21%. So what happens is, rather than saving over here at that $1,400, what we're gonna do is we're gonna nix the savings. We're not gonna do the savings because we know we can get a better rate of return over here by paying down our card. So we get rid of the savings and we add $1,400 to our cash flow, right? So now we've got $1,400 that we can utilize to do different things with. And we've got over here a credit card payment. So what we're gonna do is we're gonna take this full $5,000 and bring it over here to the credit card. And that way, that $5,000 amount at the beginning of the month goes into our credit card. We're gonna use this like a checking account, okay? We're gonna use this like our checking account. We're gonna forget about our checking account. We're gonna pay certain bills from this checking account, but we're gonna put this money into our line of credit and pay it down so we can utilize it like a checking account. So what that does is that eliminates this need for the $600 payment. And now we free up that $600 in cash flow because that card company likes the fact that we're paying down that card. They're saying, hey, look, listen, you need to make a minimum of $600 payments in order to cover your balance. That does not include all of the principal. That's a lot of interest and principal, but mostly interest. So we're gonna move that money over, and that takes care of the interest and the principal payment for the month and way more, and then that satisfied the card company. So now we've got $2,000 cash flow. We're gonna bring it over here, and then we've come down here, and what this looks like is it looks like this. Here's our 15K. That's our credit amount. Here's our 12. Okay, we're gonna pay it down by 5,000, and then it's gonna go back up by our 3, right? So our 3 is the 2,400. So that's $3,000 left, right? And so it goes back up by 3, and then it goes down by 5,000, and back up by 3, and down by 5,000, and back up by 3, and down by 5,000, and up by 3, and down by 5,000, and up by 3. And it just keeps repeating until we get down to here. And so what happens is now this payment is taken care of. So now we have this line of credit completely paid off. And so you might be asking, like, how do I make a mortgage payment from my credit card? Well, we have relationships with banks that can do that. Also, you don't have to actually make your mortgage payment from your credit card. You can keep that chunk, that amount in your account, and then just make all the other payments from that account. There's ways of making your car payment from your line of credit as well, which we can talk about as well. You can just go ahead and send me a message. But essentially, what you have to just realize is that free cash flow can be chunked down on your mortgage payment or on your line of credit balance, and that pays down faster your balance. And so you end up having this paid off in about 6.5 months, and then once that's paid off, then you can turn around and utilize that for other things. And what we'll do is we'll show you. So then we're gonna do the same thing. Now we don't have this credit card looming over our head. We're gonna take that same chunk, and we're gonna actually take a big chunk of this mortgage, and we're gonna bring it over here. So we're gonna take that $200,000, we're gonna put another $12,000 over there. So this goes down by 12,000. And then we have the same thing happen over here, which is it goes down by 5, up by 3, 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 down by 5, up by 3. And in about 6.5 months, we paid off that $12,000 chunk that we brought over from our mortgage. And so this ends up saving you quite a bit of money. If you look at an amortization schedule on this, if you just got your house, then this will save you a number of like 4 or 5 years by doing this versus paying it the normal way. And again, we just repeat the process. And so every 6.5 months, we pay off another $12,000. So it ends up taking around 7 years to pay off this $200,000 mortgage. And what ends up happening is your car gets paid off too in that 5-year period, because most car notes are 6.5%, they're amortized, so fixed interest, and you pay them off over 5 years or so 72 months. So you end up having a home payoff schedule, a mortgage. It looks like this. It's called an amortized note. Now, if you're investing, this can actually be really good. You can pick up mortgages. We also have ways of being able to invest, even if you don't have credit, even if you're self-employed. Like I try to get approved by a bank, and banks won't approve me because I'm self-employed. It's really difficult for self-employed people to get approved for traditional lending. However, we do have ways of being able to get properties under control and being able to buy properties without having to use your own credit. Because if a bank's not going to approve you, how are you going to buy houses, So we do teach that as well. But this basically is an amortization chart, and this is a 30-year note. And what ends up happening is at the 22-year mark, right here, you have what we call an inflection. And that inflection is where this is your principal payment. So we're going to give that a P. And this is an interest payment. And so you're making 80 to 90% interest payments in the first 5 years. And so most people right here, this is the 5-year mark. That's where your bank sends you a letter in the mail that says, congratulations, you've been approved for a refinance. So if you go through this process and you don't make it to this 22-year mark, you're never actually paying more principal than interest. You're always paying more interest than principal. And so this strategy right here takes the principal payments from the back end and moves it up to the front. So in the first 5 years, you're paying mostly principal. So that's why this strategy is so powerful. So if you've ever refinanced, and I grew up watching my parents pay all that interest. So they're always stuck in this 5-year mark. We moved every 5 years. So they were never actually getting ahead. And I just had this conversation with my mom, and my dad gets it. My dad's on board. He gets this whole strategy. He's using it. We're using it to cash flow on a rental property and also to pay off his house. And he's gonna have it paid off in a couple of years. And he's gonna be able to then turn that into a short-term rental or a long-term rental and be able to cash flow and increase his cash flow every month. Because ultimately, to be able to cover your expenses, your cash flow right here just needs to go up. So once you paid off this mortgage and you paid off this car note as well, now all you have is your living expenses. So you've got this $1,200 a month, so you've got $1,200, but you got $600 down here, and you've got another $1,200. So now your free cash flow ends up being $3,800 a month. Now you have a different problem. Now you've got too much cash flow, right? So what we would do with that is we can actually go out and find rental properties and buy rental properties with that cash flow. And there's ways of doing that. You can definitely go to a bank and get another conventional loan if you want to get stuck in this debt cycle. Or what you can do is you can go pick up properties without having to go to the bank. And we also teach that as well. So shoot me a message about that. Now, one last thing I want to say about this is don't be the person that falls victim for this. Now that you understand how this works, you can use banks and you can develop banking relationships in order to leverage this and leverage this. So learning how to use these banking tools is really, really important. The thing that I want to also impart on you too is that banks are not evil. Banks are for profit. So banks can be your best friend or your biggest enemy. It all depends on you. So again, if you guys got value out of this video, be sure to give it a like, give it a thumbs up, hit the notification button if you want to get more business, finance tips, digital marketing strategies, how to go ahead and start investing in real estate, especially if you are feeling overwhelmed or if there's just too much information out there. Shoot me a message. I can definitely help you out with that. I'm a researcher too, so I've definitely felt overwhelmed with all the information that's out there, but I look forward to talking with you guys. I look forward to helping you and adding more value to you, and make it a great day. Hey, one last thing before you go. I forgot to mention, we actually have an instructor who's done this strategy, and he's acquired 97 rental properties, and 70% of them are paid off because of this strategy. So I'm really, really excited about this. I want to share it with as many people as I can. If you have any questions at all, feel free to shoot me a DM. You can email me at millennial, REIG, @gmail.com. And I'll put my email down in the bio too. But you can also reach me out on Facebook. You can reach me at Cree Childs, that's CRI.CHILDS. Check me out on any of my socials. And you can also come check out our investor group, that's Millennial Investor Community on Facebook and also on Instagram. Thanks, I look forward to talking to you soon.